Okay, I just hope this works. It's been a minute, but we live. Mattis live, TNK. What's happening, people? So, hope y'all safe out there. The storm right now, man. I was walking home and I seen branches and bushes, limbs on the sidewalk, trees uprooted, laying on the ground. It's like crazy. So, yeah, I just need to close the blinds, cover the windshield, cover the windows, close your doors, plug out anything that don't need to be running, so don't cause a shortage or outage, and wait this thing out because it's serious outside right now. Like lightning is striking like a mother. But that being said, I want to take you guys through a couple of trade setups that I had. One of them already closed, and one is currently open. All right, so let me share my screen. And so every week, I'm in a couple of different trading groups, but one of them is for stocks. So every week, there's a live class, and we talk about the market outlook for the top 20 stocks and what to expect in the market. And let me select which one am I going to choose. Yeah, my entire screen. Why not? Got it. All right. Some of y'all could see that. All right. And if y'all watch the replay and there's no audio or there's lag, just comment below, let me know so I could correct it next time. All right. So I'm gonna enlarge this. All right. So right now, you know what? I'm gonna change this just for this video. I'll make this 10. Make this 20. All right, so there was a signal that went out in our group last night to short the S&P 500. All right, so let me go in a lower time frame. I can't even. When you expand the view, you can't even change the time frame. Crap. This is gonna be annoying to go back and forth, but you know what? Let me just do the 15-minute time frame. All right, so when the signal went out, it was last night, like right, I'll say a couple hours, a little after 10 o'clock. Okay, so oh man, hide this. Okay, so I think where are we? July 6th. July 6th. Okay, no, I gotta go to the 5th. Okay, so you guys not going to be able to see what I see because on TradingView it doesn't show you weekend data. So on I open this trade on my phone. Now the broker that I use is Hugo. and you could trade futures, and you could see futures is 24/7, so you can see weekend data. So even if banks are closed the holidays, I could still trade. Okay, if you have a U.S. broker, they won't allow you to trade on holidays or weekends. But I would suggest get a broker that allows you to trade on the weekends and holidays. So the the candlestick I wanted to show you, you won't be able to see it because I placed the trade and the candlestick was, let me see, it was somewhere around here. All right, this right here is 9:30 a.m. Eastern, New York time. I got in the trade about, I would say, yeah, this candlestick. Technically, it wasn't this one because it was the July 5th last night that I did it. This is showing me the candlestick from Friday at market close. So, but you get the idea. It was somewhere around here. So, unfortunately, those who weren't able to open the trade, they had to wait until Monday morning. And well, not even Monday, Tuesday morning, this morning at 9:30 to place the trade. So even though you had to wait, I'm sure you still got in a good position. But price, I got in at 4,353. Right. So I got in, wrote it down all the way to target one hit around 427. Got in right there. And so when there's a downtrend, you don't have to just stay in a trade, like open one position and stay in that whole trade until the market reverses. You could place multiple trades. So anytime the market reverses, you could place another trade. So when it came down and rallied back up, I got in. Or you could have waited for this little rally right here and place another order around here. But the second position I opened was around here for 23. What was it? Yeah, just 326 on this candlestick. So right now I'm in the red, waiting for a reversal. As you can see, stochastic is oversold, so waiting for pullback. So let me see how it's looking on the bigger time frame. So on the 1 hour, stochastics, it's around the 50 period line. It bounced off the 20, rally up. Okay. Now, I don't think this is gonna it's gonna retest previous highs, but it's not gonna go above it. Could be wrong, but I don't believe it's gonna go above it. Which I think what you may see is something like this. It's gonna come up. So this is a 1 hour time frame. It's gonna come up a little bit and drop, close below. I want to see it close below the 20 period moving average. If it does that, I'll be in profit again. So I have 3 targets on this. One is at 3. Well, the one that I closed earlier was at 327. So the next one is at What did I set it? Next one is at 305, 4305, and the one after that is 4295. Okay, which is prior support. If you can see, this is prior. Well, prior resistance becomes now current support. So right there. And let me see if I could put a Fibonacci on this. Okay. Okay, get out the way. Okay, let me move this. So now, if this is this, I mentioned this week is gonna be a bearish. I mentioned to a couple friends in the text group, this is gonna be a bearish week for stocks because the market has been long overdue for a correction. We've been oversold for a while. I mean, if you just look at, let's go on the daily time frame. All right. S&P has been oversold for most of June, most of April, most of May. Came back down. I'm looking at the stochastics now. The stochastics is an oscillator, and it identifies oversold and overbought areas. So the 80% line tells you anything above that lets you know the market is oversold. The 20% line, as you see, it's the dash line below. Anything below that lets you know the market is oversold. So anytime the market is oversold, you could expect a pullback or a change in the trend, and vice versa when it's overbought. So let me see. We've been oversold for like 2 weeks. But as you can see, it's been, I want to add I wish I could add the 50 period moving average on this. It'll show you a better picture, but I have too many indicators open, so I can't add anymore. You know what? Let me do this. Let me draw a trend line. Sheesh. All right. So going back November 2020. Okay, look at that trend line. It's touched it once, twice, almost touched it there, almost touched it there. Almost touched, well, touched it there. So once, twice, three, four times. Okay. So, oh, I didn't even notice this. So today, July 6th, look at this daily. Look at this daily candle. Look at this red candle. This is what you call a hammer, which usually find a hammer at the top of a trend. This is a big reversal candle. Well, it's not big, but this is usually a signal for reversal. A reversal in the market trend. And I'm looking for this to come down. Let me see. Okay, let me go down to the hourly time frame again, because I put these. I drew the Fibonacci on the 1 hour time frame. So oh, delete that. Yeah, I'm gonna start using this Opera browser more often, because sometimes when I use Chrome, this thing be crashing for no reason. So I'm gonna start using this again. Okay. So when you use Fibonacci, this is one of my favorite tools. The best zones you want to look at, or the best levels, I should say. This is what one of my coaches back in the day taught me. You want to look at the 50% line, or the 0.5 Fibonacci level, the 0.38, and the 618 or 0.618. So 1, 2, 3, these three right here. This is the sweet spot. When you get a pull, anytime a market reverses to this area, this is a good buying opportunity to get back in the market again. Okay. So let's say from this move right here, for argument's sake, let's say this move right here, June 21st up to here, July 6th. Let's say this is 100%. Let's say this move is 100%. And that's what the Fibonacci tool measures. The percent change in the trend. All right, let's say this is 100% move right here. The Fibonacci would tell you good opportunities for when to re-enter the market, and it could also forecast future levels of which price can reach. Hope that makes sense. So I'm gonna show that it's a tool called the Fibonacci extension, and it projects future price. But the regular Fibonacci tool tells you, good levels in the market to re-enter and buy again. So when you see a market pullback, or when you know the market is going to pull back, you could draw a Fibonacci from one swing, from the low to the high, and you always want to start from right to left. That's how I was taught. So if you go on YouTube and look up Fibonacci, you might see a lot of people drawing it from left to right, but you want to draw it from right to left, meaning from prior high, which is a resistance area right here, to prior low, and it has to be a decent sized move too. Okay, so let's go back in time. All right, let's go back to when the damn pandemic started. Okay, now I'm gonna have to zoom out to and go in the larger time frame. Let's go on the daily. So let's say you were trading Apple, you're trading Amazon, you're trading Microsoft, or you're trading Forex, because I think even the Forex market got affected by the pandemic. Okay. And let's say, all right, we're going to draw a Fibonacci on this. So this is the low of the sell-off in March, and this was the high. You always want to measure the previous high to the previous low of a larger trend. So let me bring out the Fibonacci. So we're going to start on the right side of the previous low of this trend. You want to measure from the low to the high. All right. So you're going to go with the close of the candle. You're going to go up to the close of this candle. It doesn't have to be perfect, but just stick it on there. All right. So this is 100% move. As you can see, this level is 0.23%, 0.382%. 0.5 is the 50% retracement line or level for the Fibonacci. 0.618, 786. You could also add more levels on this, but it's going to look a little messy. So this is 100. This Fibonacci tool measures 100% move of this sell-off. Okay. All right. So when would have been a good time to get back in the market? Now, the way I identify a change in the trend is like the simplest way to me is when the moving averages cross. So no matter what moving averages you use, when the smaller period moving average crosses the larger period moving average, you usually see a change in the trend, and that would be a good indication to get back in. Okay, so as you can see on this chart, I have two moving averages, the 10 and the 20. Right here you see the 10 and the 20 EMA, and the moving averages measures the previous, it measures the prior 10 trading days. So the 10 period measures the prior 10 trading days and calculates it, and you get the average, and it gives you this level. The 20 period moving average measures the prior 20 days, and it forms this line. Okay. So as you can see, I would say where X marks the spot. The 10 period is the purple line. The 20 period moving average is the orange line. It crosses and it makes like a little X. It's like a crooked X. It crosses above. You see a close. You see a close above the moving averages on April 7th, which is a bearish candlestick, but it still closes above. And that's another key thing I always look for, is a close above. I always look for a cross and either one or two closes above the moving average after it crosses. Sometimes before, depending on what time frame you're looking at. And also look at my indicators. The indicators I like to use is MACD, RSI, stochastics. On this one, I only have the stochastics. But the stochastics, remember I said that stochastics is a good tool to use for, it's best used in a sideways market when there's a lot of consolidation. You're not going to find a lot of consolidation in the S&P, but it's best used in the sideways market or in a market correction. So the three things I like to look for is a close above the 10-period moving average. The second thing I like to look for is a cross on the stochastics. See the stochastics getting tongue tied. The stochastics uses moving averages also. It has the 14-period moving average and the 3-day moving average, which they call the signal line. And the other three is just the velocity. So this is the basic setting for this stochastics, though, if you're going to use it. So no matter what time frame you're looking at, this is the setting you want to use. You can also use 14, 7, and 5. I've played around with it, but I've settled it 14, 3, 3. So remember I said the stochastics measures, it shows you oversold and overbought areas. So as you can see on the stochastics, it shows you at this week, this day, the market was oversold for like how long? Let's see. When did have a look down here and see when did the stochastic dip below the 20 period, the 20 dash line? March 9th, right? This candlestick right here. So line it up. March 9th. It dipped below the 20 line, which is the oversold line. Anything below 20 is oversold. Okay. And it stayed oversold for until, let's see, until like March 25th. So that's about 16, 2.5 weeks, almost 2.5 weeks. All right. So March 26th, it goes above the 20. Okay. Now we got some action. What else do you see? Another thing that I like to look for is my second signal is a close above the 10-period moving average. Okay, check. But would have been a good time to get in? Not necessarily, because what's the third thing I'm looking for? The moving average crossover. I'm looking for that X, because you look at what happened. It went up, got a close on March 26th. Next day, got a red candle. Next day, got a green candle. Market went up. Next day, bearish. Market went down. Next day, market went down again. You know, it gapped down to 2,465 area. Next day, bullish, but still below the moving averages. That's another thing too. Anytime you see price action below the moving averages, that's another signal that, you know, you should probably wait until it starts trending up a little bit and close above the 10 period or the 20 period. So April 3rd, bearish candle. April 6th, what happens? We gap up. April 7th. Okay, let me go back. It gaps up and also closes above the 10 period moving average. April 7th. Bearish candle. But it still closed above the 10. What also happens, it closes above the 20 period moving average. All right. And April 8th, we close above the 20 period moving averages again. Another bullish day. What also is happening? So during this past week, price has been trending up, trending. You see price go all the way up to the overbought area. So this right here, anything up 80 and above is overbought. But this is a good sign because that means, the market, the trend is reversing. And also, so look what happens now. March 9th, bingo, X. We got a little doji right here. But it gapped up. We closed. And the day after, so March 9th, March 13th. Okay, so March 9th was a Friday. March 13th was a Monday. Okay, so March 13th, bearish day. But this is the day you would look, if you logged on to TradingView and looked in your chart and you saw this, you should have a smile on your face because we just got our last confirmation. We got our cross. We got our X. You see the X? That's a lovely X right there. We got that cross. So that's a sign that, hey, the market is moving in our favor. The trend has changed. We're starting to trend back up again. And look what happened. So from March 13th onward, look where the market went. We started going up. Little pullback. We went up. Pullback. Traded sideways for a little bit. We went up. Pulled back a little bit, but we're still bullish, even though we got a moving average crossover. We had a correction right here. This is about, I don't know, probably 20% correction. Okay, this is on a daily time frame. So we had another cross. It's a good sign. Market is trending up again. We had another cross down. Market is a little bearish. We had another cross up. This is November 4th, election day. Biden got elected. Investors got happy. Bringing prosperity back to America. So investors are hopeful. Traders are hopeful. Traders wanted Biden to win. So, all Biden was spreading positive messages, bringing more wealth and equality back to America. So everyone was ecstatic. So the market took off and went crazy. So look what happened. The market went from election day, the market went from what? 3,400 all the way into the new year. The new year, things never slowed down. We got a little pullback here, end of January, went up a little bit, got a little pullback again, went up a little bit, pulled back to the 20 period moving average. We kept rallying. This, ladies and gentlemen, is a bullish market. This is what you called an uptrend, a bullish uptrend. When you see a smooth angle, when you see the moving averages and this going this particular angle and price action is above the 20 period, the 50 period, that's when you got an uptrend. Okay, so we've been in an uptrend for a while and the market needs to breathe a little bit. stocks don't go up, 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 up all the time. You know, you gotta have a correction. You gotta have a pullback. You know, there's traders in the market that's looking to short too. Like we did last night. So if I'm looking for a pullback on this market, where would I look? Well, let me go back down to the 1 hour time frame. Okay, because I always like if you're looking to buy a stock or you're looking to buy a US 30 or the S&P index or the Nasdaq, I wouldn't buy it now. I would wait till the market come back down a little bit because it's way too overvalued, way too overpriced. You know, it's like when you going shopping for anything. When you going to shopping for when you going looking for a new house, like you don't want to buy when the when the housing market, everything is up right now. You don't want to buy a house when things, like 20-30% over market value. You want to get it, 20% below market value. So same thing with the stock market. You don't want to buy when prices are when the stock is overpriced. You want prices to come down a little bit. So what would be a good level to buy it? Well, remember I said Fibonacci tool is a great tool to use in trending markets, and it gives you good buying areas. And the best buying areas in the trending market, best areas to look for is 618, the 50, and the 0.38. Okay. Let me get out my shapes. I need my shapes. All right. All right. So let me change the color of this. Okay. Let me make it orange. It's like peach. Can I get it? No, I don't want that. Yellow. It's not visible. Screw it. I'll leave it at that. All right. So what I'm measuring is the sweet zone. 0.618. And 0.382. Okay. And this is where I want price to come down to before I buy again. So I'm looking for price action to do something like come down in here. I need to get a drawing tool. I think there's a drawing tool on Trading View, but I haven't tried it yet. Yo, this rain is smashing through my window like crazy. Screw it. I'm not gonna waste your time and look for that now. All right, so I'm looking for price to come down here. and then I'll buy it again. Preferably, I want it to come to the 50 period. Okay. Let me write this up. Buy zone. This is where we want to buy. Make this bigger. All right. So we're gonna check back. We're gonna check this in a couple weeks and see where it's at. But I'm gonna update this weekly. But this is where, if you're just looking for a buy, this is where you wouldn't want to buy it. Okay, I wouldn't even get it right now. Okay, so that's it. How do you know when to buy again? That is how you know when to get back in the market. Use the Fibonacci tool, one of my favorite tools, probably my #1 tool in terms of getting good price entries and getting good price predictions. And I might make that in the next video and show you guys how to get good price predictions using the Fibonacci extension tool. But that's it. So where are we at now? I can't even I can't get the current market data because the market is closed. But I'm gonna check it in my phone. So let me check it on my phone real quick to see where we at. Y'all hear that rain though? Sheesh. All right, so we at 4,339. All right. So by the morning, I'm expecting price to be below this moving average. And if we get a close by the end of this week, if we get a close below the 20 period moving average, which is sitting at like 322, and that's a good sign. That will let you know sellers are in control and they're looking to ride this correction down. They're going to ride that correction down to these levels. All right, so be on the lookout for that. Over the next couple of days, by Thursday, we should know. Today's Tuesday. The market was closed yesterday. Yeah, by Thursday, we should definitely know and have an answer going into the weekend. So if you see price close below the 20 period moving average, then then we'll know what's up. Crap. Cool. Yeah, that's what I wanted to do. All right, this is where we want. I want to see a close below this level, 4,322. If we get a close below this level by Thursday, then we're in good condition. We're in a good spot. So that is it, guys. Mattis Live Trended Sessions. I might make this a weekly thing, but let me know what y'all think. If this was good, if y'all learned something, if y'all have questions, let me know. We can dive into it. All right. Be sure to follow me on Instagram. That's at Michael Mears. MIKAEL_MATTIS. Okay. That's my IG. That's my Snap. Hit me up. I am the networking king, and I'm signing off. Okay. See y'all on the weekend. Hopefully. Can't promise you, but I plan on going live on the weekend again. But we'll just watch my stories to find out when it's gonna be. All right. Later.